Ouch. That is the word of the day for today on December 19th, 2022. It is a pretty hard day in the market. If you're watching this after or listening to this after today, then just know that this was a rough day. This was a tough day for investors, for the overall market, and particularly for shareholders of a company that I am fond of called Palantir. Palantir has hit its newest all-time low today at $6.44, down a little bit more than the rest of the market, down about 6.5, almost 7% today. Obviously, Meta down only 2%, Tesla actually up a little bit, Amazon down 2.7%, ARK down 2.8%. Palantir is a lone stock for some reason down a bit more than the rest of the market. What is the reason for this? Honestly, there is no reason. It's quite random. I mean, there's no news that came out, nothing that unique. Palantir's Alex Karp, the CEO, might be selling some shares today as he has to sell before the end of December, which might be explaining this decline. Why is he selling shares? To cover for his options that he has. He has not sold shares on the open market at all, really in the past year. And last year when he sold shares, it was also just because he was selling shares to cover for tax purposes. You have to have options to buy shares in order to get the money to buy those shares because those options can be expensive. You have to sell shares, and that's just kind of how it goes. So Palantir's at 644. Tesla is up a little bit, but it was down, because Elon Musk said that he's stepping down from Twitter, so maybe it's up, but obviously the Twitter overhang is still on Tesla. So the question becomes, what do you make of all this? And that's kind of what I wanted to talk about today. Whether you're a Tesla shareholder, a Palantir shareholder, a general shareholder in the market, your stocks are likely down. You're probably not that up. If you are up, maybe you're in some dividend stocks, maybe you've hedged a little bit of your positions, but if you've been DCAing for the past 12 months now, since January 2022, when the S&P was at 478 and now the S&P is around 382, you are likely down on some of your investments, no matter what the investment may be. You might have likely bought dips in June and October, and you're still down because those dips were not enough to justify having a cost basis that would make you in the green. How do you justify this? How do you make sense of this? What I wanted to talk today is about conviction. And look, I think this is an important thing to talk about because there are some moments in life where you have to make a decision about what you want to do. Whether that's in life, whether that's in a relationship, whether that's a career, whether that's in an investment, you have to make a decision about, do I want to be on this side or that side? And the way to be in the gray, which is not a bad thing, but the way to be in the gray is to just invest in everything. If we're strictly talking about investing, is to go with the flow, buy the S&P index. And there is nothing wrong with that. Most people should do that. And, if you have a fairly large portfolio getting 8% a year, which is what it does on average, if you have $100,000-$200,000, it's not bad. It's kind of risk-free. It's better than bonds, better than corporate debt. Like, it's not a bad thing. But if you're looking for the 5x, the 10x, if you're looking for that return, that requires doing an intelligent amount of research, understanding that research, double, triple, quadruple checking that research with industry experts and solidifying, verifying if that research makes any sense, and then ultimately taking the bet, and taking the bet even knowing that all of that research that you've quadruple checked to make sure it makes sense could still be wrong, because nothing can actually determine if a company is going to be successful or not until they do it. But the funny thing is, companies that are successful, almost 99.9% of them, have to have someone that believes in them in the beginning. My startup in the back, Audia.io, we are trying to change the way audio is discovered. I had to convince investors this year, we raised a pre-seed round of about $300,000, that I will be right in the next couple of years, that I will be correct on my thesis and that it will work and that we will execute and that it will make sense. And someone in the world had to believe what I was saying in order to give me the money to build this company. And there were a lot of things I did that gave them a lot of assurances that this could happen. But at the end of the day, they're taking the risk that I'll figure it out. And us as individual investors are ultimately taking the risk when we're buying individual equities that these companies will figure it out. And a lot of times, if you're investing in a lot of companies, you end up being wrong. Like, especially companies that are in their smallest stages, like Google investing in right now, pretty safe bet. Google will be around. Maybe it's not going to give you a 10x, because for that to happen, Google has to go from a $1 trillion to a $10 trillion company. That's probably not going to happen as easily as something going from a $5 billion company to a $50 billion company. But you might get a 2x. You might even get a 3x, and it'll be happy, right? But it's not that risky because you're investing in Google when it's Google. Investing in Google in 2004 at the IPO, when a search engine isn't that popular because there's already a ton of search engines and you're betting that Google will just figure it out, that they'll come up with Gmail, that they'll come up with Google Docs, that they'll come up with Android, that they'll figure out a way to make YouTube a real competitor in the content space. You're betting that this will happen. And eventually in life, I kind of recognize this at a young age in college. It's like, You want to be on the side of someone who has conviction in their beliefs and executes ruthlessly against that conviction. Because even if you're wrong, you will at least tell yourself you stood for something. And in investing, I think that's the same thing. And that doesn't mean you take every single penny you have and put it into a stock that you believe in. What it does mean is you have a conviction on an idea, on a company. You've triple checked your research, and then you take the plunge. And when you take the plunge, you don't know when is the right time to take the plunge. Sometimes you may get luckier and buy it when it's at an all-time low. Sometimes you get stuck when you buy it in the middle. Then you have to DCA. You don't know what you're doing, but you're ultimately trying to take that plunge. And what I feel in terms of my relationship with Palantir is that my average now is at $17.95. I bought the dip today, about 20 shares. And, my 2,540 shares. And at this point, I'm in there. I've taken the plunge. And my question to myself is, will I be historically correct buying this company at $5, $6, $7, maybe at $4, maybe at $3? Who knows? Will I be correct? And if I believe in my research, if I believe in my conviction, if I believe in my thoughts, if I believe in my ideas, if I believe in the community of people that I've asked for not only advice, but for concepts and ultimately their perspectives and their ideas around the stock, do I believe in those people? Do I believe in people that I think have a unique insight that I can get something from that forms my thesis? Do I believe in how I'm seeing the numbers play out? Do I believe in all these different things? And the answer to me is yes. Because at this point, I don't know a better company from a tech perspective, from a philosophy perspective, and from a pure valuation perspective that is more attractive for the potential 10-20x than Palantir. Now, I know that's saying a lot, getting a 10-20x. But again, at 25 years old, that's what I'm in this for. I'm not in this for a 2x. And a 2x would be great. But it's like, and I love Meta, right? I'm getting ready to establish a position in Meta. I think they're incredibly undervalued, but I don't see Meta going $300 billion to $3 trillion, right? I don't see like a crazy 10x for Meta. I see hopefully they get to $600 billion and they double. That would be awesome. Palantir at $14 billion, trading 6 times cash per share, trading at, what is it? They're going to do $2 billion in revenue. They have a $14 billion market cap, about 7 times price of sales. The way I see them and the impact that they're having on the world and the numbers backing up that impact being, to me, incredibly undervalued, even if stock-based compensation is high, even if operating margins are the best. Those are things that get solved over time. Stock-based compensation is down 30% year over year. That's going to continue to go down. Operating margins, once they iron out a lot of the details and they get to GAAP profitability, I think those are going to start to go up. Once they start to hit more exponential scale, I think those margins go through the roof. They already have 80% gross margins. Now you just have to make sure those operate correctly. And once you get stock-based compensation out of the picture, that helps a lot. Like, there's a lot of numerical things that I think ultimately get solved. When you're investing in a company, it's almost like investing in a founder at the pre-seed stage, going back to me. A lot of the people that invested in my startup, some people invested $100, some people invested $25,000, some people invested $5,000, $10,000. They invested for me. I mean, they believed in the idea. We had done enough around the app and the concept and building out the prototype and the MVP for them to feel that there was a level of execution that I have in me to get things done. But they're betting on me. And when it comes to Palantir, when it comes to a lot of companies at this stage, when they're a $14 billion company and they're just so tiny in the grand scheme of things, but they have so much potential that you can see, you're betting on them to figure it out. That's it. You're betting on them to figure it out. And if they don't figure it out, then you lose. If they do figure it out, you win. You might not win like a crazy 10-20x, but you might win decently, or you might win spectacularly. You don't know, but there is a shot that you win because you're betting on them. And at one point in life, you have to make a bet. Either you're in the black, you're in the white, or you're in the gray. And being in the gray sucks because nothing exciting ever happens in the gray. And so you've got to make a decision. That doesn't mean be financially irresponsible. That doesn't mean take money that you take from your mortgage and refinance your home and put it into a stock because it's such a juicy position that you have to get into. No, it means live within your means, put money into stocks and investments that you can afford to not see for the next 5 years. That's always been my thesis. Every dollar that I have in the market is a dollar I don't need to see for the next 5 years. That's why I have savings that I don't invest in the market, because that money I need at any moment of time. So I keep that money. And so I'm not 100% all in on my net worth in the market, but I have made a conviction. I have made a bet, and I believe in that bet. And ultimately, if I believe in that bet, I will see if I'm right on that bet. And I might be wrong on that bet, but that's the beauty and the fun of taking a bet. especially if it's a calculated bet, especially when the world might not think your bet is correct. And that doesn't also mean buy now. That doesn't mean like, oh, it's at an all-time low, you buy. No, it could keep going lower. It just means, do you have the conviction when you see something like a Palantir go to $5, you're like, that's amazing. That's, given everything I know, that's what I wanted at. Seeing Tesla go to 120, 130, that's amazing. Given everything I've seen, that's what I wanted at. That is the question I believe that every investor has to answer. And to me, I'm becoming much more comfortable with like, yeah, I'm on the companies that I care about. That's what I will do. If there's a company I don't have a thesis for, that I don't have a conviction for, then I won't feel that way. You know, if I bought Shopify at $170 because I thought it was going to be the global e-commerce leader, I don't really care that much about that story. So now when it's $30, it's hard for me to keep DCAing because I don't care. It's just not exciting to me. Palantir is a whole different issue for me. Every vertical they can be a part of, the philosophical mission, helping with the government, the Ukraine war. I mean, there's just so many components that I've expressed many, many, many times over the past year that I think people know my thesis now. And it's a question of, do I believe in my thesis? And the answer to that question is yes, which means if I believe in my thesis, I want it to go lower. I want to see even new all-time lows because that gives me the opportunity to get something and accumulate when the rest of the world doesn't believe. And then I just have to be right about it. Will I be right? Who knows? But that is the journey and that is the fun at the end of the day of investing. Thanks so much for listening, watching. Let me know your thoughts. Tough day. Let me know how everyone's feeling. I'll see you guys in the next one.